Hi, friends. It occurs to me that some of the most powerful investing tools are also the least glamorous. Dividend stocks don't make the news like crypto or AI driven tech. They don't double overnight or spark frenzied debates on social media. And yet, quietly and consistently, they have shaped some of the most resilient portfolios in history. In this issue, I want to share how dividends have shown up in my own journey and by watching others build security through employer stock, to realizing how dividends create a reliable income stream that can sustain us for decades. Investor journey, the advantage of knowing your company. I've noticed that many of the women I admire built wealth not through exotic investments, but by holding the stock of the company they worked for. At first, I thought this was coincidence. But with my own experience investing in the company and industry where I built my career, I've realized it was an edge. By being inside the company, I knew its rhythms better than any outside analyst. I saw customer demand firsthand. I understood management strengths and weaknesses. I could sense when the business was thriving and when it wasn't. That intimate knowledge gives employees the confidence to hold through cycles and sometimes the foresight to exit before trouble arrives. It occurs to me that this kind of familiarity is one of the most underrated advantages in investing. When we know a business deeply, dividends stop being abstract numbers and start feeling like trust. Trust that the company will reward loyalty, that its cash flow is strong enough to share, and that holding long term is worth it. For those who didn't have the chance to accumulate employer stock, the lesson still applies. We can choose one or two industries we understand or value deeply, like healthcare, utilities, food, or essential services, and build our knowledge there. Over time, dividends from a select couple companies can feel like paychecks that keep coming long after our careers have ended. Why dividends endure? When I first started investing, I dismissed dividends as too small to matter. A few percent here and there seemed inconsequential compared to the excitement of growth stocks, but experience has taught me to see them differently. The truth is that dividends, when reinvested, have accounted for the majority of the stock market's long term returns. From 1960 to 2022, reinvested dividends and compounding accounted for 84% of the S&P 500's total return, Hartford funds. That's a staggering reminder that steady incremental income compounds into something extraordinary over decades. For retirees, the power of dividends shifts from growth to stability. A reliable stream of income can reduce the need to sell assets during downturns, protecting both portfolio value and peace of mind. Dividend stocks also offer inflation protection. Companies that raise their dividends regularly help ensure that our income grows as the cost of living rises. It occurs to me that dividends aren't just about money, they're about continuity. They provide reassurance that even when markets are turbulent, some part of our portfolio is still working for us quietly in the background. Investor Skills Corner. This issue's glossary highlights some of the concepts and terms referenced in this newsletter or worth knowing and understanding. 1. Dividend yield, the annual dividend payment expressed as a percentage of a stock's current price. 2. Dividend reinvestment, DRIP, automatically reinvesting dividends to purchase more shares, compounding returns over time. 3. Dividend aristocrats, companies in the S&P 500 that have increased dividends for at least 25 consecutive years. 4. Payout ratio, the percentage of earnings a company pays out as dividends, a measure of sustainability. 5. Total return, the combination of capital gains and dividends reflecting the true performance of an investment. Final thoughts. Growth may make headlines, but dividends build legacies. Their quiet, consistent nature reminds me that wealth isn't always about chasing the next big thing. Sometimes it's about building patiently with what endures. So I leave you with this question. Are you building real knowledge in the businesses you hold in your portfolio or chasing returns? I look forward to your comments. I respond to every email I receive. P.S. If you'd like to learn more or get involved in our Friday discussions, send me an email. I'd love to have you join us.